talked about the 14th. So today is really just about dividends, and I want to give you a little bit of background. I am not a financial planner. I have not been a great investor over my lifetime. I seem to have that capacity to buy high and sell low a lot, you know. I think a lot of people have that terrible experience. But as I got older, I mean, we've done well and we're very, very comfortable. But as we got older, I was a lot more concerned about losing money than I was about making money. I just need to get to the end. And Marie and I have, actually we live right behind Dick Woodmansee. And Dick is a huge dividend guy. What I'm going to show you today, Dick's forgot more about dividends than what I know. But what he has taught me is a very simplistic view of how to get higher returns and not worry so much about, I wake up every day and what's the stock market doing? Am I going to be able to afford to go on a cruise or not? So that's the intent of today, is just to show you, give you the terminologies around dividends, understand when a dividend's paid, who decides if it's paid, can they have extra ones? Anyway, kind of the whole scoop to nuts on it. So I am not a financial planner, and don't take my advice and say, oh, Dan told me I was going to make all this money, because that's not necessarily true. There is I'll say it again at the end, there is a risk of loss with this if the market goes down low enough. But what you'll see is the stocks that we'll talk about today, the range is small, even if you look back over 5 years. If you buy near the bottom of that or in the middle of that, yeah, it's going to go up and down, but you're not going to be like a Tesla that drops from 700 to 200 and then up to 1,200. So the goals of our dividend portfolio, I'm talking about Dan and Marie right now, was to limit our downside risk, and we really wanted something that would project what our income would be. Now, we're not needing it to live on every month, but we do need something that says we're going to have about this much money every year. We want reasonable returns. We're not looking for 20 or 30%, looking for that, you know, Tesla from 200 to 1,200, but we do want reasonable returns, and we want to manage the portfolio. I'm telling you, for those that that weren't in the old club, but Jeff here is like the guy that knows everything about stocks and how to analyze them, and it's how his brain is wired. And the guy is amazing. I don't want to work that hard. So I'm looking for something that's very easy to manage. And then I also wanted a tool that would say, what happens to my income if I buy this? If I change this stock from a 5% return to an 8% or 11%, what if I go back to the 5? I wanted a tool that did that for me without having to create a spreadsheet that had to be maintained all the time. And then the one that really concerns me, and I will tell you, I am definitely concerned with this that was probably a bad word, about what happens to me, what happens to my wife if and when I go first. Because with this scenario, she doesn't have to do anything. All she has to do is just know a little bit about it, and there's nothing for her to do immediately. She can manage the portfolio on her own. So I wanted something very ease of transition on my death. So first, let's talk about what a dividend is. First of all, only a board of directors can declare a dividend. And a dividend is typically a sum of money. It could be a sum of money, or it could be given in stock. So let's say that a company wants to hoard its cash, but it wants to reward its shareholders. It might give you stock. That doesn't really cost them any money. But if a company is traditionally built on, they want to provide their shareholders a reward for owning their stock, they will give it to you in cash. They might give it to you monthly. Some of them have regular dividends, some of them have special dividends. That maybe they don't normally have a dividend, but they had a great year, so they're going to declare a special dividend. Also, companies that give 18 cents every quarter, right? They have a great year. They may say, oh, we're going to have a special 45-cent dividend. So what I am looking for, and what you're gonna see in mine, is what I really want are those companies that give it to me every month, every quarter. I can project exactly when it's gonna come. And then, when they pay that dividend, it is put directly into your brokerage account. Now, when you set up your brokerage account, you can say, I would like that dividend to stay in cash. I can tell you, actually on Dick's advice, I take mine in cash. The reason that I want cash is I want to decide where that goes. You can also direct them to say, I want to buy the same stock at the market price that day, and it will just go into your portfolio. But you do that actually electronically today, if you're still not using a broker that manages all that for you. You just click a button and they give you cash. Again, that's what Dan does. That's not saying it's right or wrong. If you don't want to have to make any decisions, you just tell them, just buy the stock and put it right back in there. Okay, any questions on what a dividend is? Okay. So this is probably the second most confusing thing, and I'm going to try to simplify that. There's four important dates associated with dividends. One is the announcement date or the declaration date. So a company, even if they pay it regularly, they will have a declaration date, and they're going to say, we're going to pay you X cents, 18 cents, 45 cents, $2.10, whatever they're going to pay you, and we're going to pay you that dividend to the shareholders of record on this date, and so that is called the record date or the date of record. Okay, so if you own it at the end of that business day, it's not if you owned it from 10 to noon, that doesn't count. You have to own it at the end of that business day. You will get that dividend. The ex-dividend date is the date that you won't get it. So put it in your brain that says X stands for excluded. You will not get the dividend. This is really, really important. I can tell you going back many years ago, I would try to time dividends to figure out when you're going to get it. I'm going to also tell you why that's a really bad idea here in just a few minutes. But when you're picking a stock, maybe the time of the month that they typically pay their dividends is an important thing to you. Maybe the time of the month where you want to adjust your portfolios. So you want to watch when their ex-dividend date is, or their record date. The ex-dividend date is typically easier to find than the date of record. Okay? All right. First of all, any questions? Because we're going to have a quiz here in a little bit on this. We're all good on ex-dividend date means excluded, right? Not going to get the dividend. Date of record means goes in my pocket. So how do a dividend affect a stock's price? So I'm going to give these examples, but it doesn't always work like this. The stock price will float with the market. It may float with the industry. It may just float with that particular stock. But this is a pretty good example. QYLD is a stock that Marie and I own, and it paid an 18-cent dividend on the 24th. What did it? So the date of record was July 21st. The 24th was a Monday. So what happened to the price on Monday morning when the stock opened? It dropped from 1808 to about 1790. So this one, the reason I use this for an example, because it correlated almost exactly. That very rarely ever happens. Sometimes there's times where I've seen this actually go up. If the market's going up and there's good news from the company, but this is traditionally what everyone will tell you, what will happen. So if you're trying to time, if you're one of those people that says, oh my gosh, I think I'm going to buy that stock, get the dividend and sell it on Monday, well, I'm going to give you another reason not to do that, but this is a reason why you probably don't want to do that. investing is for long-term investors. You don't, this is not buy the dividend, this is not a, oh, it was at 1808, I'm gonna buy it and I'm gonna sell it. And I'll cover that also here in a minute. But you really don't wanna be, and by the way, that's what I used to be. I used to be that guy that, oh, I made $400, I'm out, right? And then I'd see it go up another 800. So, but it's really not meant to be that type of a tool. It's meant to be, you're in it, and you're in it for the long run. So why do some companies pay dividends and others don't? This varies with every, there must be, I don't know, 40,000 companies and mutual funds and ETFs that are traded. Some pay dividends, some pay almost all of their profit in dividends, some pay almost none. So if you think about a company that's just getting started, first of all, they're probably losing money at that point. They don't have any money to give away, but let's say they start making a little money, should they be giving it back to their shareholders? Well, they're still in an expansion mode, so they're going to want to wait to give you a dividend until some point in time where their cash flow will support it. So when you look at a company that is very mature, and I'll pick Southwest Airlines. Very mature, they had a record quarter last month, they kept their dividend exactly flat. They hardly ever raise it. And why do they do that? The money they keep, they can get a better return by reinvesting in, hopefully they'll reinvest in their IT infrastructure. And they'll invest in their pilots, because my son's a pilot, so I'd really like them to pay him more. But so that they really believe that they will get a better return on their money, or actually for you, right? You're the shareholder. At the end of the day, that's what drives the company's decision. So they're going to hoard that money, if you will, and they're going to fix their IT infrastructure, or they're going to build a new building, or they're going to buy some more planes, or whatever it is. But their return to their bottom line is going to be greater by holding that money rather than giving it back to you. So why do they give you any money? They want to give you an incentive to own the stock. They want to reward you for your stock ownership. But you will be amazed at great big companies that give little bitty dividends or no dividends. So it is, I won't say an art form, but there are a lot of reasons why companies would choose to give or not give a dividend, and there's probably just as many reasons to buy that company's stock or not buy that company's stock. It really has to do with what your personal goals are. Also, companies may pay it for a really long time, and I'm gonna take Kodak as an example. I remember Kodak film. It was great for 100 years, and then all of a sudden, it starts going like this. Kodak used to pay a nice dividend, and suddenly they can't pay the dividend anymore because their profits are going. So that could be a short-term thing. Let's say they got hit with a big lawsuit, Dow Corning or whoever that had the implant issue. So they had to suspend their dividend for a period of time, but then it will come back. So it might be a short-term suspension. Just because somebody suspends the dividend, they may be just wanting to hoard that cash for a significant investment opportunity. They may be wanting to buy a company. They may be wanting to expand their operation overseas, or whatever the reason is. So there's all kinds of reasons why a company suspends a dividend, and it doesn't necessarily mean, oh, don't that stop, okay? You really kind of need to dig a little deeper. Let's see if I got all of that. I think so, okay? This is probably one of the things that certainly I didn't understand when I first got started with this. And let me just get a show of hands. Anybody know the difference between a qualified dividend and a non-qualified dividend?
Jeff.
This is
no comment.
Okay. No comment. So this is a really good thing to know because it's going to dramatically impact the amount of money you make on dividends. So, gotta read it from here. But there's three. I'm probably going to have to read it from here.
Here, you want to shoot?
Yeah, actually. dividend to be a qualified dividend. Number one, it has to be a U.S. corporation. Now, you could have Hyundai giving a qualified dividend because they are incorporated in the United States, even though they're an Asiatic company, all right? But they have to be incorporated in the United States. And it has to be a regular dividend, not a capital gains distribution. So let's say they sold off part of their company and they're going to give you, they need to declare that as a dividend, not as a capital gains distribution. And it can't be dividends from tax exempt organizations or payments in lieu of dividends. But the big one, and this is going to be very, very confusing, and the next couple of slides will clean this up. The investor has to have held the stock for more than 60 days during the 121-day period beginning 60 days before the ex-dividend date. Now, does that clean that up for you all got that, right? So it was kind of funny because I was preparing this presentation and I was giving it to my wife and she says, well, explain that to me because I didn't get that at all. Okay, so I quickly figured out. But let's say for a nanosecond that you meet all that. I'm going to explain that last one here in just a minute. Your tax treatment, you could go up to an income of between $89,000 and $553,000, and your tax treatment is 15%. So there is not a lot of things you can do anymore and only pay 15% tax. And this is what Dick loves dividends. Tell them what your tax rate is, Dick.
I like to pay nothing.
So by the way, if your income is below 89,000, your tax on dividends is 0.
Or if you're holding it in that IRA account, it's also 0.
It's also 0. So most of ours are currently held in an IRA account, not all of it, but most of it. And that is Roth or traditional, both, right? You get to not pay any tax at all. So let's say I bought my stock, I'm at the qualifying dividend, but I didn't hold it for that 60-day period that I'm going to explain the 60-day period, and I do have a slide that actually makes sense to that. So I own a stock, and it declared the ex-dividend date, which means what?
Not getting it.
You ain't getting the money, Jack. So right here is May 15th. So number one, I am not getting the dividend if I own it over here. So the 120 days before or after the dividend is this line right here. So I have to have owned the stock from March 15th to July 15th, and I have to own that for actually it's 61 days that I have to own it for. So this is the fanciest part of the presentation. Oh, no, won't let me do that. It'll let me do it when it's not in projection mode. But I can slide this bar this way, and if I slide it all the way this way, what that's going to mean is I bought the stock on May the 14th. And May the 14th is the date of record day, okay? So I own the stock, I get the dividend, I can sell it on July 15th. And I get to pay only 15%, or 0 if you're under 89,000. Or I could own it over here on March the 15th and sell it on May the 16th, and I still get the 15%. Does that clean it up a little bit? Let's do it one more time. I'm still seeing a lot of questions. All right. Ex-dividend date is the 15th. I'm not getting the dividend. And let's say, for easiness sake, the dividend was $1,000.
You're not getting it if you buy it that day.
Right, if I buy it that
Right.
day. Okay, if I buy it on the 15th, I'm not getting the dividend, so none of this matters. But let's say that I got a $1,000 dividend, I owned it on the 14th. Let's say I bought it on the 14th. The last day that or the first day that I can sell it and still get the qualified tax treatment is July the 16th. You know what? I'm going to do something. Let me just bounce out of here.
So the whole reason for that is to make it a qualified dividend, right?
Correct.
Okay.
And so,
I just hold on to them.
and this is another reason that I say it's, so see that 60 days, I can move that anywhere in there and I get a qualified dividend. That's my ownership cycle. It's actually 61 days. Okay? 15%, as long as I have that stock somewhere in that time frame.
That's married filing jointly, right?
I'm sorry,
Yes.
yes, that's married filing jointly. The number for singles is 44,000 to 492,000 for single filers. Okay. So now, let's say that I bought that stock, held it for 5 days, and I sold it. And I made $1,000 on that. Remember, we got $1,000 dividend? Instead of 15%, I go back to my traditional tax table, and instead of paying $150, if my income, married filing jointly, is $100,000, my taxable rate is now 22%. I just gave the government another 7%. It gets a whole lot worse. If you go over 190, now you're up to 24%. So you really want to make sure, and when you get your 1099 from your broker, it will classify those for you. It automatically classifies them and tells you whether it's a qualified dividend or a non-qualified dividend. But there's no reason to give the tax man more money. So we want to retain as much of that money as we possibly can. The other thing of did I hold it long enough for it? If you own the stock for 2 years, what do you care when you sell it? You hit that 60 days, you can sell it the day after. But if you are somebody that says, ooh, they're not looking so good financially, I think I'm going to get out, you may as well at least compare. When did I buy that stock and when am I going to get rid of it?
What if you only sell part of the stock? They have to prorate the,
They will prorate
They'll prorate?
that piece of it, yes. The question was, what if I had 500 shares and I sold 100 shares? And I'm gonna make it easy. I got $1,000 dividend, I had 1,000 shares, and I sold 100 of them. $100 would become a non-qualified dividend, and 900 would be a qualified dividend. Got it? Okay.
I have a question about the XD.
Uh-huh.
Is that something that's put out once a year, or every time they pay the dividend?
Every time the declaration date, going back to the day that they say we're going to pay that dividend. Some companies will announce a year's worth of dividends in advance. Most only announce them a quarter at a time, because in today's world, who knows what's going to happen 90 days from now, right? So the day on declaration day, and actually I'm going to show you some charts. I think I can show them to you that will give you the declaration date, the ex-dividend date, and the payment date going back for years, right? Actually, I know I do have that here. But very good question. All right, everybody going to keep all the money away from the tax man now? Okay, let's keep them all dividends. So these are our purchase considerations. Is what is the dividend yield? And when I say the considerations, kind of all these mesh together. There's not a single, oh my gosh, the dividend rate's great. I'm going to buy that stock, because the dividend rate may be great, but they're giving all their money away and they don't have any money for reinvestment. So, what's the dividend longevity? How long have they been paying this? Well, if they've only paid it for 3 times, that's probably not the stock that I'm looking for. I'm wanting somebody as, right now what I look at is if they made it through the pandemic paying their dividends, I'm pretty much in, because that was a tough time for almost everybody. reliability, are they paying, MCN is one that I own, they've paid 18 cents forever. It just doesn't change. They just pay 18 cents. So I want the reliability to know that it's coming. And how often do they pay it? You may not want all companies that pay quarterly dividends. You may want to spread them out. You may want all companies that pay monthly dividends, depending upon, I need a monthly cash inflow to support my lifestyle. So you wanna, and I've got a tool for that will show you how to figure out how much money you're going to get and how much of it is coming quarterly and how much is coming monthly. And then what's the stock volatility? And I'll pick on Southwest for a minute. They've ranged from 28 to 56. That's the most volatile stock that I have in terms of a dividend stock. Most of them are in 3 to 4 points range, okay, and from anywhere from 17 to 21, 22. And what I typically try to do is I'll wait to buy that. It's gonna hit that 17, 18 range sometime in the next year. It just floats in and out. So I've also got another vehicle of where do I put that money in the meantime so that I can get some return on it. So I've got a mutual fund for that. And then that's kind of what I just covered, the current stock price. Where is that stock right now? Do I want to buy it now? Do I want to, or maybe look at a different stock that's lower in their price range? And then what's the company's financial goals and objectives and internal investment philosophy? I'm going to talk in a minute about the YLDs. There's 3 of them that I invest in. They are made for one reason. They're ETFs that all they do is make money and give it away. They have a magnificent return, but they're not ever going to be a $500 stock. It just will never happen because they're giving all their money away. They're meant to drive revenue and then turn around and give it back to their shareholders. Conversely, Tesla doesn't give any money away, and they're making a ton of money. So it's, what is their investment philosophy? At this point in my life, I want somebody, for the most part, again, we own some Southwest stock, but for the most part, we want companies that are going to give us nice, reliable dividends. They're made to make money and give it to us. Then what's the personal risk? Can I live with my net worth dropping intermittently? I'm going to tell you, since I've come to this, I don't worry so much about my net worth. It rises a little bit, it falls a little bit. It's just not a huge concern of mine anymore. Now, that doesn't mean I don't monitor it. I look at it probably once a day of where's my stock portfolio. I used to watch it 8, 10, 12, 15 times a day, particularly on a bad day, and Marie will tell you I get in bad moods because of this goes on or that goes on. So what is my personal risk, all right? There are things that you can put your money in right now that there's almost no risk and get 5% on. I think you can go get a CD today for 4.5%. If you want no risk, that's probably where you need to be. But you can probably get double that if you're willing to risk a little bit. You can go up even higher, right? You can get up into that 10, 11, 12, 13% if you're willing to take on a little more risk. And then what is my personal income need? Some people need to be taking X dollars per month out of their brokerage account just for basic expenses and to live on. Or they want to take a cruise and they know that it's coming in 8 months. I'm going to have to suck that money out. So you're going to want to say, can I afford that to go down in the interim? Is it going to pay me enough dividends? So this is just kind of a mesh of yes, no, maybe. And when the right one kicks out, it's generally not that hard to figure out. There's 2 or 3 stocks that will meet what you need in terms of your personal needs. So this is what I do. This is Dan's own magic chart, right? So this is actually, of course, I have XYLD here and I have QYLD there, but they're both the same thing. So, going back to your question, Gina, the X date was 6/20. They paid 18 cents. They declared that dividend on the 16th. The record date was the 21st. Okay? So, why would the X date be the 20th and the record date is the 21st? That one doesn't make any sense to me, but they're all like that. But the X date is the date that I don't want to own the stock by. But apparently they're doing, the record date is the day they search their records. The date of record is the day that you have to own the stock by.
Declaration date?
No, not the declaration date. This is the date they're going to search the records of who owned it on the 20th. Okay?
Probably less than X date.
Yes. So if I own that stock on the 19th, I'm good. If I own that stock on the 20th, I'm not good. So in this case, this is QYLD. At the time I did this goes back some time ago. The price was $16.82. The 10-year high was $25.13. The 10-year low was $15.66. So the 10-year range was $9.47. So the current percent of the 10-year range was in the 12% range. Okay? Down here, if I look at the 1-year range, the high was $18.53 and the low was $15. It has a very small range. This is what I'm looking for. I want those nice tight ranges that I'm not going to lose a lot of money, I'm not going to make a lot of money, but it's currently at 50% of the range. So $15, $18.63, current price 16. Okay, that's kind of right in the middle. If it's in the lower part of that, that's even better. But I really probably wouldn't to buy that if it was sitting up at $18.90 or $18.45. Okay? Follow me? So what are the best dividend stocks to buy? And this came out of U.S. News and World Report, relatively trusted magazine. But my personal lineup with theirs is 0. And it all depends. You've heard about opinions. Well, everybody's got one. Everybody's got one on dividends too. So if you're looking for something, Coca-Cola has long been kind of the gold standard in dividends. They've been paying their dividends for years. It's been steady, and their stock goes up and down with the market. So if you can live with that, that might be a great stock for you. But you don't get the high yield dividends that Marie and I are looking for. This is Berkshire Hathaway's, and Warren Buffett is widely considered the best investor of all time. My lineup with his is 0. So it wasn't that shocking. And it's not, again, he's looking for really long-term growth, high yield for his overall portfolio. It's just not what we are looking for. We're looking for, let's just keep what we got, let's get a nice return. And by the way, Warren Buffett, I think last year had a 22% overall return on his portfolio. He might not get anywhere close to that. It's not what I'm going for. It's what Jeff goes for.
35.
So these are our portfolio that we've held over the last 6 months, and it gives you an idea of the type of return that we're looking for. We're looking for the 7, 10, 11% range. Most of these, remember I talked about the YLDs? I'll talk about them here again in a minute. Are companies that make their money and then give it back to their shareholders. Their expense ratio of actually running their company sits at like 0.5% of their total revenue. But right now, if I take all, in my entire net worth, and we have rent houses, we have, cash, we have stocks, we have cars, I take that all in, 45% of our total net worth is now in dividend stocks, and by the way, that's rising, as we move forward. And this is just kind of where ours sits right now. It's not in any particular, I don't pay a lot of attention to, and I want to be diversified, but I also don't want to worry too much about it, okay, about being diversified. I want the quality stocks that will provide us the dividends. And right now, somebody else would look at our portfolio and say, oh, you're way too heavy in the YLDs or MCN or some of those others. Okay, I know that, and I'm comfortable with that. So this is one that I learned about 7 or 8 months ago. It is one when I talked about you can find a safe haven for your money. I can tell you right now we have a sizable chunk of money in this fund. It pays a little over 5%. I think I just read it yesterday. It's at about 5.2%. So the share price is always $1. You can buy and sell this fund daily. Your purchase goes through at 4 o'clock in the afternoon, and if you sell it, it goes through at 4 o'clock in the afternoon. But if you just have money for the weekend, you can put it in on a Friday, and then but you can't sell it till Monday at 4 o'clock. So I can buy it at 4 o'clock on Friday, and I will get interest until Monday at 4 o'clock. That interest, I believe, is paid, we'll check it here in a bit, but I believe it's paid on the 15th of every month. So I get my interest, but I don't get paid on that. And you can take money in and out of there all the time. I don't know that all brokerage companies do, and maybe Jeff, you can tell me this, but I know if you have it in a brokerage account, you can put in the order to sell, and with Schwab, you can actually sell, you can buy more stock that same day before you actually sell it. So let's say I put in an order to sell 10,000 shares for $10,000 at 1 o'clock on Monday, even though I put it in on Friday, I can buy the stock on Monday, and then they'll sell it. Now, I can't go back and cancel that order anymore, obviously.
So you only can buy Schwab?
No, you can buy that. You can be with, actually, right now, I'm still with TD Ameritrade because we haven't converted over.
No, you aren't.
Well, I'm not, but I am. Yeah.
What about the taxes on the holding of it?
The taxes on the income derived
Right.
from this, you know what? Probably, I don't know, you know, on a mutual fund, I think they're just, I don't think they're classified as dividends, they're classified as income. But don't hold me to that, I'm not, again, tax expert.
How stable has that 5% yield been, say, over the last?
It's, relatively, back when money was 0.2%, this one was, I think, in the 2.5%, 3%, something like that. So as the money has come up, because what they're investing in treasuries and securities and very stable things as well. So it's not like, oh, back in the pandemic when things were 0.2%, they were still paying 5. When we first bought it 6 months ago, I think they were 4.7, and now they're about 5.2, something like that. Yes.
2 questions. Is this considered a dividend?
That's why I was just saying, I don't believe that's the case on here.
Yeah, it sounds more like a CD rate than.
Yeah.
Okay.
Yeah, you're gonna pay your regular tax. But the nice thing about that is, if you got a CD, you can pay the regular rate too.
Yep.
Is it's a place to put your money if you don't have that, tolerance risk. It's also a place to put your money. Hey, I just sold this stock on Thursday, and I don't have, my stock went up a whole bunch, I'm gonna go ahead and sell it. I haven't done the right research yet to put my money someplace else. I'm gonna wait until Monday, Tuesday, Wednesday, when I've got more time and I know exactly where I wanna put it. It's a place just to kind of tuck your money away and not worry about it. Yeah.
I'll actually say something.
Okay.
Some of these are ETFs and mutual funds are somewhat the same thing, very similar. This type of fund, it's probably a 7-day fund, so
Yes,
it's
it
very
is.
short. Some of them are 30, some of them might be 6 months. So read your portfolio. It's like a CD. If you go buy a CD that's paying 5%, it might only be a 1 month, a 6 month, a 1 year. This type of thing is exactly the same thing, except it's just an entity altogether.
So when you say
read
it's
your
it's a
portfolio.
7-day, that 5.29 that I just read, that's locked for 7 days. Next week, it might drop to 5.17 and it might go up to 5.31. But it changes 4 times a month, this particular one.
You mentioned your TDA now, it's going to that, I'm in a similar situation, but don't have that. What was it called with TDA?
Still the same thing.
Same thing, okay.
Yeah, you can buy this fund if you're with any brokerage
Oh, I
company.
realize that, yeah.
So, yeah, it was called the same thing. It was always SWBXX. So what are the YLDs? I talked about this a little bit, and this goes back to the Rob's bio. This is why I am. I listened to Jeff one day, and he was talking to us about puts and calls. Anybody know what those are? Most confusing, crazy things I've ever heard of. But, yeah, and Jeff explained to us that if you own a stock, you can play the puts and calls game, and you can almost absolutely 100% make 1 to 1.5% every month, if you're willing to do all that work. Now, that's what I got out of your talk, Jeff.
That's about it.
But when he told me what went into that work, I was like, well, number one, you gotta be a lot smarter than me to figure all that out. Number two, I'm not gonna do all that work. So the YLDs are companies that's what they do. They own the underlying stock, but they own billions of dollars of it. And then they do the puts and calls thing, and they sell the options, and then if the stock goes up, great, they make money, and if it doesn't go up, great, they make money. So it works for us, and again, Dick kind of turned me on to these, and when I saw the returns on it, I was like, holy cash. But this one is, I believe, XYLD. There's $295 billion in that fund. So when you're thinking of, they're making 1 to 1.5% on $295 billion, they can afford to give me their 18 cents or whatever it is that they make at the end. But their cost of running that fund is really, really small. It's like 0.35 or 0.5%. So there's 3 of them. It's XYLD, RYLD, and QYLD. And what they base those on, when you get the presentation, you can click these links and it will give you this same information. But they're based on the Russell. The RYLD is the Russell index. I think Q is the technology index, and X is the Dow.
NASDAQ and S&P.
NASDAQ and S&P. But they have, when we pop out, we'll do a couple of things in terms of finding, we're doing a little bit of history on them, but they have been long dividend payers, I should say. Okay, so this is, even though we're just a little bit early, let me go back.
What's today's date? Oh, you're way off. 12. Yeah.
I have to log. Nope.
Thank you.
You only know because they don't have a watch.
I've got it on my watch because I can't read it in the dark.
But it is July, right?
That's true.
Yeah.
You're in trouble.
It's 2022.
Okay, I thought these links were.
Anyway, he kept rolling us over. You know, like I said, he's no longer at TD Ameritrade, he's at Schwab. I think they all spent either all of July or all part of August for rolling everybody over.
I think it was
links will take you to each one of these, and then we'll give you everything from the ticker symbol, how many shares outstanding they are, the number of holdings. Now, they have 2,000 holdings, different companies that they invest in. What their yield is, their current trading month, 12-month trailing yield is 13.29%. The distribution yield is 11.75%. So it's just incredible returns. And again, you can lose money. I want to show you that. I built a portfolio in the next session after we take a little break. I built a portfolio in a dividend tracking software that you can get free, and bought $500,000 worth of securities on Wednesday. It lost $100 in value or $150 in value between then and now. But I bought them, and they're all in these types of securities. So you can be down thousands of dollars, and then you can be up thousands of dollars, but overall you're going to be able to see what your return is. So we'll do that after the break. Okay, is there anything within what I've covered so far that anybody has any questions on?
So is this share, all of this is $1 share?
Not this one, the SWVXX is all, my son is like the most conservative investor. I mean, actually, if he ever buys a stock, the thing you absolutely want to do is sell it short. I've never seen anything like it. So he has hundreds of thousands of dollars in SWVXX, and he's like, I don't want anything else. I'm going to buy a house. I can't afford to lose it right now. So he likes the fact that it's always $1, and he only makes, drives me crazy, but I've got him to get like, oh, I don't know, just a few $1,000s of other stuff. And sure enough, he bought it, and he dropped it. Actually, I told him I was giving this presentation, and he says, you're giving people financial advice? He says, everything I touch that you tell me to do goes.
One of the companies that you showed, and all the companies that you showed, you have to go back to it, one was Suncor, and we saw at our company, don't do any business, don't touch Suncor because it's being hacked right now and everything. How do you know, I mean, with those percentages, no matter what's going on with the company, are those percentages that true?
So, really, the only thing you can do, in my mind, is look at what have they done in the last 3 to 5 years, and we're going to look at that of how do we find the right company. Well, again, if they paid dividends all the way through the pandemic, but they're all going to hit a rough patch. There is nobody that doesn't get hacked. There's nobody that doesn't have a major competitor come into their market or whatever the case may be. So there's always that risk of loss. But I have the app on my phone that kind of tracks my stocks and stuff. So I read the news. I don't go crazy on it. I used to literally, oh my gosh, what's going to happen today? And I don't do that anymore. I'm just a much more relaxed. I get to spend more time on the HOA stuff.
I want to go back to that 15% tax rate.
I'm sorry?
I want to go back to that 15% tax rate.
Yes, sir.
If you have dividends in your retirement plan, they're going to be taxed.
No.
At your regular rate when you
No.
take it out.
When you take the money out.
So I'm saying maybe you should use dividends in a personal plan and not a retirement.
Well, except that for me, most of my money's in a retirement plan. For me, I like the stability of a dividend stock rather than the wild fluctuations. For me, and again, all of this presentation is about what Dan and Marie did. It's not about investing advice to anybody else. But my brother, he's all over the place and he makes a lot more money than I do. But I just have this aversion to losing a lot of my 401k money late in life and then not having the time to recover. So I've converted almost all of that over to dividends at this point. And the other thing is, and I talked a little bit about it at the beginning, we talked last month about converting your money from your 401k, your traditional IRA to,
Roth.
Roth IRA. If you talk to a financial planner, and I'm not the guy to talk to, because actually my financial planner's Dick, my brother, and not the other guy, I don't have one, but, holy cow, if you can get your money into a Roth right now and not touch your IRMA, that's what we're gonna be talking about next month, is how to get your money out of your traditional IRA into a Roth. We've been very fortunate, I haven't taken my Social Security yet, so next year, my income's gonna go up by a lot. And the last 2 years, I should have been converting up to the maximum. Well, I got it this year, and I'm gonna get it next year, but then my income's up, so now I'm gonna be in a higher tax rate when I'm taking it out. Actually, a much higher tax rate than when I put it in back when I was 40, right? So, it has not worked out quite as well as I would have liked. But, I encourage anybody that is in that position that you probably aren't gonna be able to afford to pay them any better 5 years from now. By the way, the Trump tax credits all go off on 2025 unless Congress does something. I don't think our Congress is gonna be in the mood to let us hang on to more money. So it's only gonna get worse in the future. So if you can get your money over to that Roth, it is going to save you a lot of money. So that will be our topic next month. Okay, let's take a 10-minute break and we will come back. How's that?
The non-member clipboard for next month, if you wanna sign up, is down at the end. It's gonna make its
For
room
October.
around, I'm sorry, yeah, for October, I'm sorry.
No,
Yes.
no.
Over our lifetimes, have had spreadsheets that tell us what we bought it at, and when the next dividend is, and how we're gonna calculate it, what our percent of return was, and all that sort of thing. So the more I got involved with this, and Dick was just like, holy cow, he's got all this stuff, I'm like, this still seems like a lot of work to me. And so I was tracking it by spreadsheet, whatever. So one day I was sitting at home and I just put in tracking dividends, I think is what I typed into Google. And this one popped up. So I'm not saying this is the right one. I'm just saying I found it and it works for me, okay? And I will explain a little bit about it. First of all, there is a So they have a free package, and I'm actually gonna open this up and do it live to show it to you. But for the free package, you only get one portfolio. If you pay for their premium version, it's $149 or $150 a year, $15 a month. They recently ran a 20% off for $120 a year. But you can have unlimited portfolios, unlimited stocks in portfolios, unlimited watch lists, deep dive diversification analysis, payout calendars, dividend grades. They just throw all kinds of stuff, no advertisements. Right now, for what I need, I just use the free version, and I have to manually go in. You can actually let them link into your brokerage account, which I don't think I'd let my brother do that. Marie can. But it has just been a really neat tool for me, and it allows me to build what-if scenarios very, very quickly. Let's see here. So on Wednesday, I pretended that the Sweetgrass Financial Club had $500,000, and I spent it all at $50,000 a clip, so that they're all exactly the same. Of the $10,000 10 stocks that I showed you earlier. And I bought, now this, of course you can't get it to 50, but on that day, it was 5,005, on this one, 5,036. So give or take, it was within $500,000 and $200, something, $500,000, $100, something like that. So that will be the portfolio that we're going to be playing with. So it's the Sweetgrass Educational Financial Club. Let me. So what I liked about this particular site, all you have to do is give them your name, your email, and create a password. That's it. They don't ask for a credit card. They don't do anything. And they give you just enough to make you hungry for more, but it's enough for me right now that I'm not going to spend any more money with them. So when I say there's a risk of loss, I bought this on Wednesday, and by the end of Wednesday it was down, then it came back up, and so we are at $499,806. We've lost $296. Okay, that's the way the market is. If you looked at the market on Friday, it wasn't great. Most people, I know, I lost a lot more than that, personally. So. But what the dividend tracker does that I particularly find it wonderful, it takes all of our stocks, and we've purchased, again, $50,000. It shows you where the market is, what you paid for it. It gives you how many shares you have, the current stock price, where's your change, profit and loss percentage. Of course, we got some going up, we got some going down. And to edit it, you just click on this button. If I want to trash this one and take all that money and put it in that one, I'm going to do some of that for you here in a minute. But these are your edit keys over here. Okay? Well, what's really awesome is I created all that. It takes all that information and it says my dividend yield for all of our $500,000 is 8.57%. Yield on cost right now is 8.57% because we just put it in. And our August income will be $4,720, and our annual income will be $42,320. So it calculates all that for you free, right? So anytime I add to our portfolio or change our portfolio or anything, I just go in and manually. This is another reason why I just buy it and hold it and let them pay us our dividends, and I can just adjust it as I need it. So this is the one that I really like. It's my payout calendar. So this calculates exactly, based on today's holdings, that my year-to-date income would be $26,000, my monthly average would be $3,500, my August income would be $4,700, my annual income would be $42,000 on our $500,000 investment. This also tells me that my August number is $4,700, my September number would be here, and now why does that go up and down? Everybody figure it out? Quarterly and monthly, right? Some of them are quarterly, some of them are monthly. So these good months are when all the monthlies are paying and all the quarterlies are paying. If I need my monthly, if I need a nice steady stream, I probably want monthly dividends. If I can live with that break, I'm probably going to be able to adjust it and get maybe a little better return or more solid stocks or whatever. As I come down here, it not only tells me how much I'm going to get in August, it tells me that all the YLDs and JEPI will pay on the 1st to the 6th, and I can actually go in here, and it will tell me that I will have $1,357 hit my account on August the 1st. I will have $262 hit on August the 4th. So I can project what our income's going to be. I can't project what the price of the stock's going to be, but I can know exactly I'm going to get that much money on that day. So let's go back to our portfolio. Sweetgrass Financial Education Club. And let's say and I'm not gonna change the price of the stocks, but let's say that I wanted to adjust QYLD, and I wanted to sell 1,000 shares of that, or I did sell 1,000 shares. I just adjust that by 1,000. Put that back. And now what happened to my portfolio number? It went down by the value of that 1,000 shares. But let's say that, so also, notice my annual income, all those numbers changed, went down to $40,000 from $42,000. But let's see what the value of that was. So that was $18,000 at, let's take HTC. Just a second. Share. So this is about the same. Let's edit this. Let's see if I can come out that right here. And I buy 1,000 shares here. I guess it really doesn't matter. So now, it was about the same money. My projections come out right. But when I go to my August income, now I'm up several $100s because I've switched that from one fund to another. So it's just a real quick, easy way of being able to, I don't go into this that often because I'm not buying and selling that often. But if I want to say, holy cow, I thought that dividend, actually this happened not just a couple of weeks ago, I thought that dividend paid on the 15th. Well, it didn't pay till the 18th. You know, sometimes dividend dates change. So I just went in, checked in here, yep, doesn't pay till the 18th, so. It's just a real easy software system. And by the way, I have never opened up to their entire deal here. I'm probably going to, just because for $120, I don't have to make a whole lot of money to pay their $120 fee. It's just, I hate paying annual fees because it just seems like they just keep coming. But this will do a whole bunch of analysis for you. It builds in all kinds of calculators. It will build in your diversification. Actually, this again will show me that I'm probably not diversified enough. It says just give me a little warning saying that I'm semi-diversified, but I'm probably not diversified enough. So as you become more confident in what you're doing, this probably becomes a better package to spend your $120 on. I'm not enough that I'm wheeling and dealing and trying to drive, that extra 3 to 5% of my annual revenue to be enough to spend the money. I'm just really tight when it comes to spending the annual fee stuff because it tends to run forever and I forget to shut it off. Okay, any questions on this one? Because it's again, very, very easy to build. It is just the dividendtracker.com. Yeah.
How long have you had it?
Oh, golly, probably 4 months, something like that.
Does it give you any other warnings about the your choice of the companies that you invested in? In other words,
I'm sure it probably does in the full version,
okay.
but not in the free version.
So most of this stocks were already there before you started using this. You haven't done a lot of changes in the 4 months.
I've only added. I haven't sold any dividend stocks in the last 4 months. We just keep putting more and more into those stocks because they have just performed well.
Yeah, just for clarification, that 42,000, that's assuming your dividends you take as cash, right?
Okay, yes. That 42,000 is that, and it is predicating that projection on what they paid in the last 12 months. Okay, because they may go up, they may go down, but if you had held it projection is over the last 12 months, they will remain constant. That's where you come up with the $42,000. Okay. So let's say for a nanosecond, and actually I can do a real live example here, but somebody was saying, where can I see, how do I know that a company is going to pay the dividend? And you know, that famous saying that history is the best predictor of the future, that's what I live by when it comes to dividends. So this is a link, and it's the same, you can find it in the presentation, but you can type in any stock, but this will show you how long they have been paying it. And you can see that it has gone up and down a little bit. Here it was at 38 cents, it went all the way up to 50 cents here, and you know, down to 40 cents here. It has fluctuated, but not so much that I would be concerned. I'm more concerned with the fact that it is continuing to come every month. Now it's been dropping here, and you see it at 28, 32, 28. It's still providing enough of a return because the stock price has fallen to accommodate that for the time when I bought it. But actually, Dick emailed me the other day. Is it PDI? Dick? And I have not bought this stock, but I think I'm going to. I haven't done my full research yet. But look at that dividend yield, 13.8 cents. Okay, so let's just look and kind of analyze it as if we were thinking about buying it. So it's been clicking along at 22 cents here for a long time. And here, this is also kind of interesting because you'll see, well shoot, there's one time they paid 42 cents. Well, if you look, that was an extraordinary dividend because here was their November dividend, here's their December dividend, here's their January dividend. They slipped an extra one in there of 42 cents. Yeah.
It's like in December they do that.
Yeah, so they're just kind of getting some extra money all year and then they kick it out, but they're not promising, that's the kind of thing, they're not gonna promise you that it's gonna come. So that looks pretty solid to me when you go back, let's see how far this goes back.
Those are also year-end stuff, Dan.
Pardon me?
They're all at the end of the year of each
Yeah.
one of the years, so.
But there's $1.62.
Oh, wow.
That's when bonds are doing well.
But those dividends have been 19 cents, or no, they've been 22 cents since 2015. That seems like a pretty safe bet to me. Now, I'd still do some other research, you know, on the stock price and how variable that is and that sort of thing, but it's pretty tough to beat a dividend of 13%. Yes, sir.
What stock was that? I saw T. Rowe Price, but I didn't see the.
It is PDI.
It's a PIMCO stock.
It's a what?
PIMCO.
Okay.
What's it selling for?
I don't think this tells me what it sells.
1908, the middle of that is? 1908, I think it says. 1910,
I'm missing it.
They're at the top.
Oh, yeah. Let me just do this real here.
Price.
Here real quick and tell you what. So it's 52-week low is 1723.
Yeah, my mom
And
has.
52-week high is 2332, and it's currently at 19. So it's kind of in that. Remember when I look at your slide bar of is it high or low right now? It's kind of in that range. So that now I spend a lot more time on it than that, but it certainly looks like it would be something that would fit.
I have a question. Going back a little bit, a couple of slides back, when you were using your dividend calculator,
Uh-huh.
that 42,000, that would be income would use
Can't tell.
in projecting your taxes?
Looks like it's money.
Yeah,
Or would some of
So,
us be qualified versus not?
well, in my case, everything will be qualified, because I'm done buying and selling. I won't say, I shouldn't say that. I just sold some Hercules, HTGC or whatever it is, because it went up so high that I was like, holy cow, this is crazy. You can't go, and sure enough, it dropped back a little bit. And so it just seemed like it was way too high. But yes, your $42,000, and what that does, there's the great thing that I use that for, I am really concerned about not paying the government any more money on IRMA. How many of you have had to pay IRMA?
Yes.
I was shocked my whole life, I thought Medicare was free. How dumb was I?
Yeah.
And then all of a sudden, not only is it not free, but because I made so much money, I get to pay even more. So, and particularly next year, we're gonna start getting our, my Social Security, and I'm like, I'm gonna pay again. So I'm really looking for things of keeping it in the IRA, trying to hold back any money that they can grab, and it's bad, it's not terrible, but it's $7,000 a year, or $10,000 a year. It's enough to really make me angry. So it's hard, it's enough to make me work to avoid it.
So, based on that, you would figure the tax rate at 15%?
At 15%.
Rather than,
Right now, because of the way I am investing, I just calculate everything at 15% when it comes to dividends. Or if it's sitting over in my IRA, it's at zero.
Don't worry about
But
it.
again, that's very,
Well, then you still have your
if someone
RMD.
loses a
Well,
spouse,
I'll
it
get
changes
there.
the
I'm
whole.
not 72
Yeah,
yet.
I'm sorry.
RMD, you
No.
still have
Some
to
of
get
us-
that.
You still gotta take that out, right?
What they call RDS.
Wait, do you have to take RMDs out of Roths?
No.
Yeah, once you get it converted over, you don't have to take it out, so you can let it go. But Marie brings a really good point, and I will tell you, this is unrelated to dividends, it's more about spouses and death and taxes, I guess, but, when we were doing our planning and we were getting involved in this, first of all, this was the first time when I got deeply involved in this, that I could really project what my income was gonna be. Because when you're buying and selling stocks, you think you're gonna do well, and China attacks Taiwan or something, and the whole world goes to pot. You don't know what it's gonna be, but now I can kind of project what it's gonna be. So as we were sitting down looking at it, we're trying to avoid IRMA, and she says, well, what happens if you die? And I said, you're gonna pay IRMA, because that's just the way it is, because it's, you drop that number from 190,000 down to 90,000, and there's enough fixed income there that she's just gonna pay it. And I said, just don't worry about it, because you'll be able to afford it when I'm gone.
So he says.
That's right.
So, but what I do now is I take Marie's Social Security, our retirement, all of our fixed income, I project what our rental income's gonna be, and then I take my dividends and say, okay, this is how much income I think it's gonna be, and then I'm gonna take the rest out of my traditional IRA and put it over into my Roth IRA to try and get that over just as fast as we possibly can. Dick, I think you said you're 100% out?
95.
95, and you've been doing it for how long?
20 years.
20 years.
Took a while.
Smarter guy than me, because I'm starting last year. So,
I wish I had started a long time ago too.
yeah, I will just tell you, if you have a financial plan or whatever, I would really push them to say, what can I afford to get out? Because as the new tax laws come back, as the tax credits that were put in go away, our tax numbers are all gonna go up. So you're probably going to be paying a much higher number in the future. The good news is that 15% wasn't part of the tax trump. That was there before. So we're good to hold there as it comes to dividends. Everything else is gonna get taxed higher.
They need the money, so they can continue that.
You're gonna take the money.
Oh, I know.
I think it's so hard to make more money.
It's well spent. Yeah.
The conversion
part that you said the financial planner can help you with. I learned that a couple of years ago from our tax guy as well. So the tax, you
Yeah.
don't need to have a financial planner, you can ask your tax advisor about converting some of your IRA up to, typically they do it up to the top of the, whatever bracket you're in. And then
Right.
So you don't have to go to the next.
But my
bracket.
experience with the tax planner is they don't generally think about IRMA.
You know, which, yeah, so that's just a symptom
So
of
does everybody
converting.
here know what IRMA is?
No.
Okay.
So that's
So IRMA is a penalty for making too much money by the government.
one.
And so if you start doing well, and I could actually
200 some.
pull that up real
There's
quick,
all kind of levels.
so you know what.
Yeah, it depends if you're single or.
Well,
We got a
there's
few
also
here.
amount levels, you know, there's,
Most of us,
they punish you for making money.
it's the tax system's aggressive.
IRMAA.
But it isn't just, you know, the $97,000 went for, you know, the lower one.
So this is for your Part B.
Medicare.
Yeah.
Medicare Part B.
But you pay IRMA on two pieces. You pay it on the Part B and the Part D. Okay, so it's your regular and then also your prescription. So if you are filing a joint return and it is greater than $194,000, you each pay $65.90 extra a month. So here's what everybody pays. Everybody pays $164, unless, as long as you're less than or equal to 194,000. Okay? These are the married filing jointly. These are the singles.
Yeah, nice.
Well, if collectively our income is, pick a number, $150,000, and I die and almost none of it goes away, now Marie's going to fall into IRMA. That's just the way life is going to be. So, but that number is 164. But if you bounce greater than 194, now I'm paying an extra 65. If I go over 246, I'm paying 164. By the way, that's times 2, right? So now I'm paying thousands of dollars extra, but if I just manage my money to keep it under that number, I don't pay anything extra. So the tax man generally doesn't do all those calculations for you, and you can trip that wire pretty easy. And it's really hard for them to adjust it for 2 years. I've battled it 3 times now, and each time I've won, but you have to give them a complete what happened and why did you bounce over and.
They average over the last 2 years
Yeah.
income and they figure it.
So, but you have to go to the Social Security office.
They look 2 years back.
Yeah, they look at the 2 years back.
2 years, I'm sorry, 2 years back.
But,
yeah.
but you're also,
It is worth the appeal.
Yes, it
It
is.
is, yeah, I have won the appeal 3 times.
Yeah, me too.
but you're also guessing what it's gonna be in 2 years.
Well, and that's exactly what happened to me. Good for us, but when I retired, the company was having a marginal year, and I think they did some magical accounting stuff, and they ended up having a good year. And I had told them, being Social Security, oh, I'm not gonna make that much money, so give me that lower rate. Well, guess what? I got a giant bonus. Now, good for me, right? But we ended up paying, it probably cost us $6,000 to get a $50,000 bonus just in that, forgetting the regular taxes and everything else. So it was painful and wonderful at the same time. But guess what? Now I gotta file my appeal again, telling them that, oops, yeah, that was a mistake. I lied to you last time. I was gonna get more money.
Well, we didn't know we were getting.
Yeah, but we really didn't know we were getting. So not only do you have to pay this one, but you have to pay the Part D. Now, Part D isn't that much, but again, if you bounce over that number, you add those 2 numbers together times 2.
Every
So-
month.
Every month.
Yeah.
So, and it is quite the ordeal to, I think you would probably tell them it's not a fun experience to do the protest. And they don't, it's not like you can go in and say, oh, okay, here's your deal. Yeah. No, we'll let you know in a little while. well, yeah, you shouldn't have denied it, so now I gotta go back again. It's just not a real
When
fun
the
process.
person working on your file is no longer there,
Oh, yeah.
and the new person doesn't know, and it's.
Well, your file's over in the other department.
The dog ate it.
It's easier, just go ahead and die, you know, let 'em-
But it is your
let 'em
money.
have all your
But
money.
it is your money, that's right.
If you thought.
So before I go, again, please, this was just, Dan, this is what we do in the financial club. Somebody tells them, everybody what they do. We're pretty open about, well, we screwed up and we bought that, you know. So we're gonna lose money sometimes, but hopefully we're gonna make money. This is for Marie and I. It's probably, what we're doing probably isn't right for you, but you need to find your own path. And the strategy provides a predictable income without a ton of monitoring. Being able to use that dividend tracker, it just tells me, okay, here's how much is coming, and I just know it's gonna be there. And actually, since I've started doing this, probably, I don't know, a year and a half ago, it's kind of trickled in. All of them have been just exactly what I anticipated coming. But there is a risk of loss. Make no mistake about it. If the market falls, if we go to war, if we get new president, if the wind blows from the south to the north anymore, I mean, the stock market, all the days, it just, the old days rules are all going to pot because the company comes out and says, oh, we have record earnings. And then their stock drops. You know, I just don't know how all that works anymore. Really, it has greatly reduced my stress in terms of investing. I look at it a few times a week, sometimes a couple times a day, but just to kind of see where it is. It's not like I'm trying to analyze anything anymore. But it's really easy to build your what-if scenarios. If I take our money out of SWVXX and put it into Y, I plug that into Dividend Tracker, our income goes up $1,000 a year if I do that. And then it's a very easy financial transition for Marie, because I really, I think most guys, if you look around, are probably gonna go first. It's not always the case, but there are so many women that I see that their husband leaves them. My greatest fear is Marie will never be able to watch television again. She gets so mad at it, it won't go in the right place.
You buy the talking remote.
A simple takeaway in my brain, stay within your tax range, play with your money, whatever you want to do, just know your cap, where you can invest on cash or not. Know that. And just know you're gonna be, Uncle Sam is going to get a portion.
Yep.
And no matter if you have the properties, if you have the real estate.
Yep. Well, and actually, I was talking to somebody at the break, and he said, you know, I'm in CDs right now, and I'm getting over 5%. He says it's 100% safe. I don't know,
Yep.
low risk
I like
guy,
them.
right? Okay, if that meets your income needs, it's not about whoever has the most when you die wins something. You know, it is, for most of us, something's gonna go to our kids. And by the way, they didn't earn any of that. So, but figure out your risk tolerance, okay? Actually, if this starts going to pot, I'm gonna have a few weeks, months to adjust. You know, you can have a, okay, I thought they were throwing us out, but they're not. You'll have some adjustment time. You may lose some money, but, you know, if we go to war or whatever the case may be, but if you look at the trailing history of the dividends, if they paid through the pandemic, they're probably gonna survive just about anything that comes through. Because I hate to say I can't imagine anything being more financially disruptive than that, but Lord knows what that might bring. So,
Nuclear war, there's nothing to worry
and
about.
finally, I know I've given him a couple shout outs, but I will tell you, Dick has changed my life. He's my neighbor and my friend. But I just wouldn't be in the place where I'm at today. And I wouldn't be there without the club, the old Rob's Bayou guys, and now the Financial Education Club. I truly do hope you won't make this a one and done. If you come every month, you will get something out of it. I guarantee you. I can't tell you how many little tidbits I've picked up and made $500, $1,000, just because we had a magnificent presentation from Ed on Tesla. Well, I'm not buying Tesla stock. I know a lot of the guys did. But I went and sat in one. I found out you can go sit in one. You can take a test drive in one.
Just down the road, yeah.
And they're a lot neater car than I thought they were. But things that, did you know who has the best selling car in the world now? It's Tesla. It outsells the Toyota Corolla, or Toyota Camry.
Camry.
Their profit margin is 18%.
Huge.
You know what GM's profit margin is? Like 1. Ford is 2. I mean, the company is incredible. So even if you don't make any money off a presentation, but you figure out, hey, I can go test drive one of those Teslas. By the way,
Grandson.
yeah, and by the way, there's one of them goes 0 to 60 in 3 seconds.
How do you go with the cost?
So we will email this out today. Well, actually, I'm gonna tell you, we're leaving, so it may be a while. It may be next week before I get this out to folks. I'll try and do it tonight, but I don't know that I'll get it out. But just respond to that email, and I'll put the instructions in it to join the club. Then you will get, even if you're not here, you'll still get the presentations, you'll get the minutes, and there's no cost to you ever for this club. It's just a bunch of folks getting together, and someday you're gonna say, you know what, I could give a talk on that. So that's why it's just a great way to share stuff. I've learned so much from you guys, and Randy, who is our president, isn't here today, and that's why he asked me to fill in. But I really do hope you won't make it a one and done and come on back, and someday I might see you up here. Is there anything else questions before we break up?
Good job.
Sheets are up here if you need to sign up for something. Not buying your way out.
You shut the camera?
Really need some help. Maui. I work for Microsoft. I manage global disasters. I've been pulling all-nighters since Tuesday, helping them out with technology, but there's a lot of organizations that are helping Maui. They really need help. So
Your $100 million fund was set up.
That, if you have an IT issue, we're here the second and fourth Thursday from 4 to 5. It is incredible the talent that's in that room. So for those of you that don't know Edna, she runs Microsoft's World Disaster Program. How many employees you have? 3,000? She has 3,000 employees. She lives here, and she volunteers at the help desk. I don't know where else you're going to get that kind of quality work. So please bring your IT issues to us, and then I would be very remiss if I didn't ask you to vote. I'd be more remiss if I didn't ask you to vote for me. But most of all, please vote.
You're the best.
Thank you.
No babies to kiss.